Getting approval for loans. Hi, this is Justin from Money Bootcamp. Today's video is on the loans approval process. A lot of people do at times think this is a bit of witchcraft and think it's a very soft process, but actually there is a specific set of things that you need to be doing, and that's what the bank or other lender is going to look for. So you need to look at this from the start. The first thing here is repayment ability, right? So if a lender gives you a loan, do you have some ability to repay this? What this means for you is you need to have an income, and if possible, a regular income. If you have a regular income, you're going to get a better loan. If you have a less regular income, you're either going to get loans that are higher percentage interest rate, or you're possibly not going to be able to get a loan at all. So if you have a job that pays you weekly or monthly, you're in a great starting place. The second point here is track record. So if you have had loans before, if you're someone who has had one or two loans and you paid them off bit by bit and you've shown you can pay a loan, that's another great thing. That's another thing the lenders will look for. So if you have this, again, you're in a good position. Some people get worried if they've never had a loan before that this will completely get rid of their chances, but don't worry, it's not the only thing, and also there are other things they look for. So if you've had a loan before and you haven't repaid it, or you're bad with repaying it and you weren't as regular as you should have been, that will go against you, but not having a loan at all isn't as bad as many people think. The third point here is fallbacks or collateral. So some loans, what they will do at the start is you will have to put up some money. So if you're borrowing €5,000 from a credit union, the credit union might ask you to put up €500 or €1,000 as collateral. So if you stop paying or if you're not paying, they will be able to take that as their collateral. Another thing that is related to this can be having a guarantor. So if you're someone who's never had a loan before, you're younger, maybe your pay is not as strong as it could be, it's not as regular as it could be, you can have someone, a friend, a family member, whoever, act as a guarantor on your loan. So they'll sign a form saying if you fail to pay, they will pay. Fourth point is level of debt. So if you are someone who has no debt and you tick the boxes with the other points, you're fine on this. If you're someone who maybe has a car loan or a mortgage or both, or some other situation where you have a few small loans, but you're well able to pay them. So for example, say if you have €2,000 a month after tax coming in and you're paying a loan or loans that are €200 or €300 a month, then this is probably fine and it's not going to affect your chances in a lot of cases of getting another loan. If, however, you have 80% of your after-tax money going into loans, you're not going to be given another loan. The main points to think about here is that lenders want to get paid back. They may have different standards of what they're looking for and what kind of risks they're going to take. So one lender may consider you highly, highly risky, and another may feel completely comfortable taking you on as a customer. With that in mind, you also have to know that lenders' preferences will change over time. Sometimes this is even at different points of the year. A bank may think you're too risky and may refuse you a loan at one point of the year, but this doesn't mean they won't give you a loan next year or even possibly at a different time in the year. Don't think that because you've been refused once for a loan, this means you are unlendable and no lender is ever going to give you any money. Sometimes it's a matter of sorting the points we discussed, and at other times it can just be the preferences of the bank, and sometimes that's at a specific point of time. These lenders won't hold a grudge. If you are able to tick off those boxes and you are a viable customer for them, they will lend to you. So being refused once shouldn't put you off. This has been a Personal Finance Friday question from Money Bootcamp. If you have your own questions, send it to me. If you have any questions about your personal financial planning, you can also contact me at moneybootcamp.com or email me justin@moneybootcamp.com. Money Bootcamp, learn money, live better.